a lot of the crypto yield that the yield products, it's not yield. First off, what you're doing is you're selling the long tail volatility. It's like I use a reference, like a lot of these yield shops, it's like selling far out of the money S&P put options. You collect a premium, your account balance grows, but ultimately some 3 4 sigma move comes and wipes out your entire portfolio. That's what you're doing when you're depositing your Bitcoin, and specifically Bitcoin. Like, I think USDC yield is somewhat different, and still it shouldn't make sense that you're getting an 8% yield on some of these platforms when the treasury yield is 3%. Like, there's inherent risk there. That's the first thing. But I think that's really important to understand, right? Like, in 2021, you saw the explosion of all of these yield products, but it was for a reason, right? It was because Bitcoin went parabolic. So did a lot of these like altcoins too. And on these derivative platforms, also with the rise of DeFi, there was so much demand for leverage, and there was so much demand to speculatively like long Bitcoin and other crypto assets, that you could actually generate, and also the GBTC arbitrage, you could generate a huge amount of delta neutral yield. Delta neutral meaning you don't have exposure to the upside or downside of Bitcoin. You're just harvesting an arbitrage. So it would be selling futures, longing spot. You have no exposure to Bitcoin, the asset, but you're getting, at the top of the bubble, it was like a 40% annualized yield. On perpetual futures, it's obviously a variable rate, but you could, for weeks at a time, get a 50 to 100% yield just because of how leveraged long the entire system was. So obviously that's all gone. There's nearly no contango, futures price over spot. The premium, or that spread on an annualized basis, like 2 to 3 to 4% maybe. So that's gone. The GBTC premium is now a GBTC discount, and it's a one-way redemption structure. So you can't take the GBTC and get your Bitcoin back. That's trading at a 30% discount. So all of these yields that the BlockFis of the world, the Celsius of the world, basically had to arbitrage and to pay these yields disappeared. And at the same time, because of how well these products worked at the time, because they could harvest these arbitrage opportunities, the platform's asset under management grew by a lot. So the BlockFis of the world, Celsius, Voyager, I don't have exact numbers in front of me, but I know for sure that their assets under management in USD and BTC terms increased from the beginning of 2020 to the start of 2022. There's no doubt about that. And you saw midway through the bull market, like the BlockFis of the world, they started to lower those yields that they offered because they realized it was never sustainable. BlockFi also had their income statements leaked from the last 2 years. And they lost money in 2020 and 2021. So again, I'm not here to bash any business. I'm not saying, I'm not trying to start a bank run. I've been accused as being a fear monger, but you have to understand that the risk reward of holding specifically your Bitcoin on these exchanges for a 1 to 2% Bitcoin denominated yield is just so not worth it. And it really never was. So if you got your yield from BlockFi for the last 2 years, great. But I would highly recommend you withdraw, because it seems like a lot of these businesses, like a yield or a loan from SBF and FTX doesn't really change anything. I think really probably Voyager ends up being owned, the equity ends up being owned by FTX just due to where creditors stand in the capital structure. So does FTX just take a big hit and kind of make all these depositors whole? Maybe. But if not for that, then the Voyager of the world, they're structurally insolvent. And I don't know how many other of these kind of bucket shops are out there, for lack of a better term, but none of them are safe. That's just, I would say, a fact by now. And I wouldn't leave it up to chance.
Quick little hit list of other platforms that offer you yield on Bitcoin or other crypto: Gemini, Coinbase, as Dylan mentioned, BlockFi. I believe we were talking this morning at the beginning of the stream, Chris, about what was it? OKCoin. I know that we were talking a little bit. Prime Trust. Prime Trust was the bank. They supply both Swan as well as Strike, but they have a plethora of other exchanges that do actually offer yields. I know that Odell was the one tweeting out about the Prime Trust stuff, and I'm sure, Dylan, it'll be on your radar if it's not already soon enough. I wonder, why? I mean, I kind of know why, but I want your guys' opinion. on this bailout that Sam Bankman-Fried has essentially offered to BlockFi and why it's even necessary, and why should BlockFi not fail? Or why, in your opinions, should BlockFi fail?
Yeah, I mean it's overall bad for the industry, if you want to call it that, for these, the Celsius, these platforms to collapse. That's not a good thing. It's a stain on the industry, on Bitcoin. Even if Bitcoin is an apolitical neutral protocol, it's just not a good look. So I would say that's the first thing. And you saw SBF comment something similar to those lines, like, we have an interest in stopping the contagion. One is probably just due to the fact that if the market's 95% off the highs, it's not good for the FTX business model. And the higher that the Bitcoin price is, probably the more interest they have in their platform, the more fees they make. So they have a vested interest in keeping the market somewhat propped up, right? They're definitely going to probably lose some money on these agreements, because a loan to an insolvent corporation like a Voyager per se, was taking customer funds and lending them out unsecured to hedge funds, Three Arrows, which ultimately is not money good. They're, more interest, more loans doesn't actually help that platform at all. So it's probably just going to be a restructuring deal where FTX eats the difference. So maybe there's some brand value or intangibles for the BlockFis of the world. So that's certainly part of it. Customer acquisitions. Maybe it's BlockFi brought to you by FTX in a year. I'm not sure, ultimately, but I would say that it's probably in big players' interest to stem this kind of industry-wide contagion we've seen. Whether this is the end of it or not, or more dead bodies float to shore, I have my I have my doubts. I don't think this is over. But I would also like to just distinguish between Bitcoin denominated yields, or say other crypto assets, versus the native protocol yields that some of these altcoin shitcoins spin off. That's just really just paid with emissions, or paid with kind of the inflation of the token itself. So like ETH 2.0, if it ever becomes a thing, which it probably will, they're paying you, you're getting yield for staking built off, spun off from the protocol. There's no way that can work with a proof of work network with an absolutely scarce asset like Bitcoin, which is why Bitcoin denominated yield there's always inherent risk there. It's never, they have to do something with those coins. So I think that's just an important to distinguish, right? Is some of these altcoins, they have their altcoin denominated yield that they pay for through the token emission, or through a bunch of other kind of elaborate schemes. But with Bitcoin, there's no way to actually harvest or generate yield in a risk-free way, which is often misunderstood, from my experience.